Guys, look at this chart. Now, we need to talk about Nike, one of the biggest names in sports apparel worldwide. Their stock price soared up to $179 in 2021, but has since dropped by almost 60% back to 2020 price levels. So if you're looking for an opportunity in the market, this might catch your eye. And if you're interested in some nice dividends, then you need to watch this video until the end. Let's examine Nike's business in detail. Nike's a global icon, battling it out with Adidas, Puma, Asics, and Under Armour. They rake in cash from footwear, apparel, and equipment, sold through Nike stores online and wholesalers. In 2024, they hit $51.4 billion in revenue, with footwear leading at $33 billion. They cover everything from running, basketball, and soccer to casual athleisure, targeting men, women, and kids. Nike is still at the top of the game. Just look at this data from 2024. 97% of sneaker owners in the U.S. know Nike, and 68% say it's a popular brand. That's a clear sign of their massive reach and appeal, even if usage, loyalty, and buzz sit a bit lower. Nike's brand power is undeniable, keeping them ahead of pack. Compared to the competition, Nike's ahead on revenue and profitability, leaning on solid cost control and a powerful brand. The pandemic hit hard in 2020, but as restrictions lifted, demand for sports and fitness products rebounded significantly. Additionally, Nike's strategic emphasis on e-commerce and direct-to-consumer sales has bolstered resilience and sustained growth in the post-pandemic landscape. Nike's stock has plummeted about 60% since its peak, and several factors are weighing it down. First, growth has stalled. In fiscal 2024, revenue grew just 1% currency-adjusted to $51.4 billion, a sharp drop from the 8% annual gain seen before, with China flatlining at $7.9 billion despite being a former growth driver. Nike's push into direct consumer sales has also strained relationships with wholesale partners, disrupting their business model. The challenges persist in Q3 2025, where despite beating expectations with $11.27 billion in revenue, above the $11.01 billion forecast, and earnings of 54 cents per share versus 29 cents expected, sales fell 9% year over year. Nike's Q4 outlook is bleak, projecting a mid to high single-digit revenue decline, worse than the 11.4% drop analysts expected, while new 20% tariffs on goods from China, where 24% of their suppliers are based, threaten margins, especially as China's sales dropped 17% to $1.73 billion. Add to that a declining gross margin of 41.5%, down 3.3 points due to discounts and rising costs, plus waning consumer confidence, and it's no surprise investors are losing confidence. Looking at the broader financials, North America led with $20.3 billion and EMEA added $13.6 billion in 2024, but Nike's overall growth is slowing, with forecasted mid-single-digit decline for 2025. Their net profit margin stands at 11.1%, with $5.7 billion in net income, and they hold $10.4 billion in cash against $12.1 billion in debt, showing financial stability despite the challenges. Also, their dividend per share has grown steadily from $1.08 in 2020 to $1.51 in 2024, offering a current yield close to 2% at a share price of $70 as of March 2025, which is slightly below the industry average of 2 to 3%, but attractive for its consistent growth. Nike has raised its dividend for 23 consecutive years, with the latest increase to 40 cents per share in Q3 2025. They've also been active with share buybacks, repurchasing $499 million worth of stock in Q3 2025, which can boost earnings per share over time by reducing the number of shares outstanding. For those interested in passive income through dividends, Nike's reliable dividend growth and moderate payout ratio of 36% signals sustainability, though the yield might not be the highest for income-focused investors compared to other sectors. Despite declining revenue growth, Nike is still a global icon with a world-famous brand, a loyal fan base, and clear dominance in sport apparel. Think $51.4 billion in revenue in 2024, with North America alone bringing in $20.3 billion. Their innovation, such as sustainable materials, keeps them ahead. However, they are heavily reliant on a few markets. China's stagnation at $7.9 billion highlights that risk. Additionally, their push for direct-to-consumer sales has strained wholesale partnerships, causing distribution hiccups, which will likely remain a major challenge for the next couple of years. On the other hand, many people have high hopes for the new CEO, Elliott Hill. He is a Nike veteran who knows the company inside and out, having started as an intern 36 years ago. He could bring fresh momentum as well as the expertise to restructure Nike for future growth. Also promising are key growth areas such as sustainable products, digital expansion, and new collaboration just like schemes with Kim Kardashian targeting women's apparel, which offers exciting revenue potential. But keep in mind, economic slowdowns and declining consumer confidence, especially in markets like China, are a drag, while supply chain issues, such as new 20% tariffs on goods from China and rising competition threaten to slow Nike down. So, can Nike bounce back? Analysts are cautiously optimistic, projecting a near-term stock price between $90 and $110, and long-term, they see potential for a rebound through smarter distribution strategies and innovation. New CEO Elliott Hill, who started as an intern and rose through Nike's ranks, brings insider expertise that's seen as a big plus, but he's got challenges ahead. In Q1 2025, revenue dropped 10% to $11.6 billion, and Nike expects a 5 to 10% decline for the full year, driven by weak demand in China and fierce competition. Hill's success will hinge on how quickly he can roll out innovations and fix past strategic missteps. Growth opportunities look promising, though. Sustainable products are in demand. Personalized services via digital platforms are gaining traction, and e-commerce expansion, including apps like Nike Training Club, could drive new revenue. The sports and athleisure market is thriving with trends like health consciousness, sustainability, and digitalization, and Nike's strong brand positions them well, despite economic uncertainties. For dividend seekers, Nike remains a steady pick with consistent growth, though it'll take patience for bigger returns. So, what's the bottom line? Nike's a legend facing tough times. The stock's down 60%, but with Hill at the helm and moves like the scheme's partnership, there may be light at the end of the tunnel. So what do you think? Is Nike set for a comeback, or are you skeptical? Drop your thoughts in the comments. I'd love to hear from you. Don't forget to like and subscribe for more insights, and see you in the next video.